Welcome back to the channel, and in this video, we're going to go over a top dividend king that you can buy right now for some long-term sustainable growth. This company has paid out and grown that dividend for 64 consecutive years, proving that through depressions and recessions, they can continue to operate, generate high net income, and reward investors with a quarterly cash payment. They've proven to operate through any type of economic condition, and I believe they will continue to do so for many decades in the future. And the stock that we're going to go over today is Procter Gamble, ticker PG, the leader in the consumer sector, currently trades around $130 per share with a $320 billion market cap. They are one of the largest companies in the S&P 500, and they just shared their latest quarterly results, and they absolutely crushed analyst expectations, beating on top line revenue and earnings per share guidance. This company has been very strong over the past 90 days, and in today's video, we're going to discuss Procter & Gamble as a whole, discuss the future outlook of the business, go over their latest quarterly report, and I'm going to share with you my personal opinion to why I believe this may be the best dividend king on the market right now. But before we do that, if you're new to the channel, I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. So please hit the like button, subscribe to the channel for daily videos about stocks, and we're going to jump right in to Procter & Gamble, probably the best dividend king on the market right now. So over the past year, the company has only grown by around 3%. But as of late, from the most recent high of around $144 per share, the company is down around 10%. Even after they posted a very strong second quarter, beating all of analyst expectations. So I think Procter & Gamble is at a very attractive price point at this $130 level. Over the past 5 years, their share price is up 68%, and their current dividend yield is 2.43%. They trade with a forward PE of just around 23, so a lot of value in this dividend king. And now we're going to take a look at a short clip from their CFO discussing the success they had over the last 90 days.
As you said, in the quarter, top line 8%. Organic sales grew 15%, plus 18% on a constant currency basis. Free cash flow productivity 113%. And very encouragingly, the success was broad-based. So in our two largest markets, the US and China, we grew 12% in each.
So we just heard from Procter & Gamble's CFO, and although he shared a lot of positive results, the company's share price has still taken a massive dive. So now if we actually take a look at the numbers, they reported $1.64 earnings per share, beating the analyst estimate, which was at $1.51. And their total revenue for the 90-day span came in at $19.7 billion, beating the analyst prediction of $19.3 billion. So you can see their top and bottom line did come in well above what analysts were predicting. And they actually raised their future guidance for the full year of 2021. And that's incredible. During this year and throughout the pandemic, a lot of companies have stopped issuing guidance because it's kind of unpredictable of what the pandemic's going to cause. But Procter & Gamble is the opposite. Instead of declining or stopped giving guidance, they actually raised their expectation. From an earlier estimate, they were predicting around 3 to 4% growth, but have now increased their revenue expectation to 5 to 6% for the total fiscal year of 2021, which is absolutely incredible. And for this big conglomerate and this big giant, they return a ton of capital to investors, which is why people love to own Procter & Gamble in a dividend portfolio. They intend to pay around $8 billion in dividends over this fiscal year and expect to buy back $10 billion of shares over that same period. So Procter & Gamble is returning $18 billion to investors over 2021, and this is huge. Procter & Gamble is a cash cow business that continues to prove that they can return capital to investors in both a dividend and huge share buybacks. And I believe this will continue for decades in the future. And that's because Procter & Gamble sells necessities. They are the leader in the consumer sector, and they have 10 different segments of the overall Procter & Gamble business. And those segments are baby care, fabric care, family care, feminine care, grooming, hair care, home care, oral care, and personal health care. And they also have a skin and personal care segment as well. So 10 different segments of Procter & Gamble's businesses, all really tailored towards necessities. All the brands that you see right here on your screen are in every store all across North America and globally, and these are the market leaders in each different segment. Procter & Gamble owns all these different brands under their umbrella and really one of the largest conglomerates in the entire world. And why I believe they will continue to succeed is because their products are never going to go out of style. People will always need feminine care, family care, fabric care, baby care. These sell products and they have some of the leading brands in these segments that are necessities no matter what's going on in the economy, regardless if we're in a good and bad time, regardless of what's going on in the world, people are going to need products that Procter & Gamble provides. And I think that's why they've been so resilient, one of the longest dividend growth streaks on the market. And I believe they'll continue to do that for many years in the future. And they're not reliant on one or two of these segments for a majority of their business. If we take a look over this latest report, they saw growth all across the board. All of their segments saw increase in sales over the past 90 days. We saw a 12% growth in fabric care, 9% in healthcare, 6% in grooming and baby and feminine care, and 5% in beauty. So you can see all of their segments saw a sales growth over the past 90 days, proving that this company is so nicely diversified, not only within North America, but all across the world in many different business segments. And if we take a look at some highlights over this latest Q2 report, like we saw, their portfolio of 10 different categories of daily use products continued to grow. Net sales were up 8%. Organic sales grew 8%. Core earnings per share was up 15%. Their operating cash flow for this quarter came in at $5.4 billion, and their adjusted free cash flow productivity was 113%. And overall, the US and China both grew at over 12%, which is incredible. And this company, although they sell necessities, which are usually purchased in person at retailers, their e-commerce growth was up 50% in the first half of the fiscal year of 2021, which is absolutely insane. And like I mentioned, they saw growth in all 10 global categories, and home care grew around 30%, oral care and family care grew double digits, fabric care grew single high double digits, and like we saw, all their other categories did post mid-single digit growth. So it's incredible. Like there's so much you can do and discuss about this business. All they own are market leaders in the consumer sector. They own necessities that people are going to buy no matter what. And I own Procter & Gamble in my personal portfolio as well because of all these strong points. I love this company. I have no plan to sell it anytime soon. And I own 22 shares with a market value of just under $3,000. And over this dip that we're seeing, I may buy more of PG and continue to hold for the long term. And let's take a look at their dividend. So they're a dividend king. That's the key point on why we're talking about them today. Their current yield is 2.4%. Their net income payout ratio is only 55%, which is still extremely sustainable. And they grow their dividend, averaging around 3 to 4% per year growth over the past 5 years. And their dividend growth streak is at 64 consecutive years. So although the dividend growth isn't anything special, your dividend is growing, outpacing inflation each and every year, and that's not the only way they return capital to investors. So of course, this dividend king status is very impressive, but like we saw, they're doing $10 billion of share buybacks over this year, so you are getting more capital returned to you in the value of your shares. And if we take a look, their current dividend safety score is at 99, which is the highest rating possible, indicating that it is very safe and extremely unlikely that we see a dividend cut coming from Procter & Gamble anytime soon. So that just shows this dividend is expected to be very safe over the long term and coming in with the highest rating possible, even after a 64 consecutive year of dividend growth, is just so impressive, and I love owning this leader in the consumer space. And another thing to point out is that their beta is low at 0.72. So when you own Procter & Gamble, you're not getting a lot of share price volatility. So this is more of a slow, consistent grower, and over the long term, I believe investors will be greatly rewarded. And at this current level of $130 per share, Simply Wall Street predicts that it is 22% undervalued, and the fair value estimate per share is at 167%. So you can get an undervalued dividend king that is one of the best product mixes in the entire world. It is globally diversified, sales are up over the latest quarter, and it's on a 10% share price dip, and the company is currently estimated to be 22% undervalued. So overall, I like Procter & Gamble at this level, and like I mentioned, I do plan on buying more if we see any more dips moving forward. And over the next 5 years in the future, analysts are still predicting that their top and bottom line will see consistent growth. By the year end of 2025, we're predicting the company to be around $90 billion of total top line revenue, with earnings coming in at over $17 billion for the year. So nothing exponential, but continuous long-term growth from this dividend king each and every year. And if we jump over to Yahoo Finance, they're predicting 9% per year share price growth over the next 5 years, tied along with that 2 to 3% dividend and maybe a nice holding in your portfolio. The company is rated as a buy, and the average price target from Yahoo Finance is at $151 per share, so significant upside from where we sit today. And if we take a look at 2 other websites, we can see that the analyst price target on TipRanks is at $153, indicating around 18% upside over the next 12 months. And if we jump over to CNN, you can see that their average price target is $156, representing 20% upside from this current level. So many analysts from all across different companies are predicting some upside over the next year, and we can expect between 10 to 12% annual growth moving forward. And if we take a look at PG's income statement, we can see how long-term and sustainable this dividend king has been. Not rapid growth, but each and every year, you can see the top line has expanded, and their total 12-month revenue is around $74 billion. And you can see just by looking at the chart, barely any increases, but consistently growing year over year, which is to be expected by this global conglomerate. Net income comes in at close to $14 billion over the latest year, and you can see moving forward, we're expecting that to hit over $17 billion by 2025. So Procter Gamble is one of the most well-rounded businesses on the entire market, one of the leaders in the consumer space with a $320 billion market cap. And in no way is this a fast-growing company where you're going to see 30 to 40% upward momentum in a single year. But what this is a long-term, consistent dividend king if you want consistent and growing income. I believe the dividend will continue to grow for decades in the future. I don't think there's anything going to slow them down. And the fact that this company continues to acquire other brands and expand their portfolio, I believe they will remain the market leader in the consumer sector and only grow for many years in the future. So definitely take a look at Procter & Gamble if you don't already own this dividend king, one of the top dividend payers on the entire market, and they are on a 10% decline as of late. We saw all analysts are actually bullish on this business. They just posted a very strong quarter, and I think people are only going to be loading up on necessities now because of the pandemic more than ever for many years in the future, only benefiting PG's top and bottom line. Like I mentioned, I do own this company. My market value of the shares is just below $3,000, and I have no intention of selling anytime soon, and I do plan to buy more over the next few weeks. So thank you for watching, everyone. I am the Gen Z Investor. Every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. So please hit the like button, subscribe to the channel for daily videos, and I will see you in tomorrow's episode.